any businessman, I think it originated from a certain community of people. It is said to be like, they tell it in a very local slang, where 1,000 days you will have to be in a business to really get the hang of it.
The fact that most people who starts a business closes down and then comes back to industry, that closure happens within the 3 years. They did not survive that 3 years.
See, it is also probably two reasons. It can be he's not prepared well for this 3 years, right? So when you plan your capital, when you plan your financial stability,
what is most suited for a distribution business?
the most easiest, quickest, cheapest way to start a business.
The question is not about whom to do business with. The question is about whom not to do business with. Hello viewers, welcome to yet another podcast from MedDevice. Today I have with me Mr. Abisheik Aravindan, who is a chartered accountant and a co-founder of the Grad Company, a chartered accountancy company that specializes on offering certain very highly specific services to MSMEs as well as large corporates. Grad Company has over 40 employees and is spread across 4 different cities in India. That's Coimbatore, Bangalore, Mumbai, and Tirupur. Mr. Abhishek has specialized in offering services, advisory services, especially in the area of valuation, M&A, and fundraising. So that's a very short introduction of Abhishek. Actually, he's much more. Welcome, Abhishek, to this podcast.
Thanks
If you
for
would like to
introduction.
add something more than what I said.
No, I think you have covered pretty much. So it's been last 10 years been doing this finance. Started with audit,
Right.
then started my own firm. Then obviously to penetrate the market, you need a niche to penetrate. Being first gen into
Right.
practice and business overall. So found my niche, worked on it consistently. So here now.
Wonderful, wonderful. So, viewers, today what we're going to do is we'll have 2 parts of the discussion. The first part, Abhishek, we will focus on formation of a new business. And when we say business, in the diagnostic industry, it's heavily distributor-oriented industry. So there are all kind of distributors. A small distributor who is localized, serving labs, particular city or a town, to a larger distributor offering their services and products to a state or a couple of states, to up to a pan-India distribution network. So today's discussion would revolve around the distributor organizations. So that's more specific in that sense. And what we will do is in the first part, we will talk more about formation of a distribution business and then scaling up and the challenges as well as the advices that Abhishek can offer to a new entrepreneur, to an entrepreneur who is getting into a diagnostic business in its formation stage. And in the second part, we will talk about the aspects of an established distribution house in terms of taking it to the next level, in terms of valuation, in terms of succession planning, and so on and so forth. So let's explore these things together with Abhishek. So Abhishek, my first question to you is, when someone wants to start a new business, especially into the distribution, what are those key ideas that they should keep in mind in its preparatory stage so that he grows his business over time into a large successful?
Definitely in any business, I think you start with being really realistic.
Absolutely.
Right, so everything starts from realistic, being self-aware, knowing what exactly your strengths and opportunities are when you're going to start, what your leverage is going to be in the business, and probably having a 1-2 year plan. Maybe, you mentioned long term. When you start somewhere, it's quite difficult to plan for next 10 years because it started. But having a clear, solid plan for 1 to 2 years is pretty much enough, in my opinion. And And obviously you'll have to take care of your personal finances. Business is a risky, bumpy journey. Once you start, just takes you at a fast you never imagined when you start.
True.
So better to have your personal finance and life pretty organized.
Yeah.
Then you probably start your business.
Right. When you say life organized, do you mean someone should start later into his life so that he is in that sense organized, or he can take a plunge early on in his
It's not about being late or early. It's about whether you have enough reserves. So
Right.
basically, primarily the cash flows, right? So let's say I'm an employee.
Mhm.
I'm pretty much used to money hitting my bank account every month,
Very true.
right? But in business, there is no such guarantee, right? You may not receive any payments from your customer for like 3 months,
Yeah.
but at the end of the third month, probably you'll get a 50 lakh credit.
True.
So this is how the cash flows will be, right?
Yeah.
So to manage this, you need some solid financial backing. Let's say if you are married, your spouse is working, can
Yeah.
support the family, or let's say you have your personal savings
Yeah.
over many number of years. So this is what I call it, preparing yourself personal, financially. Yeah.
Because this question has the reason why I asked when to start is because quite several company employees, especially who have been into sales in the diagnostic companies, they turn to be distributors themselves. Okay, some of them turn to be distributors
That's right.
early on, like say in 30s, or someone in 40s, or some people even in 50s. Towards the fag end of their career, when some of them are forced to look for other opportunities, and that thus they reach into distribution.
Business.
So what are those opportunities that one should evaluate before taking the plunge?
Yeah. See, I mean, pretty natural and interesting, right? So you've been in sales all your life. You really understand after some time, sales is one of the most crucial skills you need in business, right? But that's not the only skill as you scale.
Yeah.
That which you understand after some point of time.
Yeah.
But to begin to get the initial plunge, sales is the only skill you need, right? So people
Very-
naturally start.
Yeah.
But the problem is, many a times people start with 1-2 customers, but having 1-2 customers, I would say in my personal opinion, is not a business opportunity. Probably you can try to temporarily monetize it
Yeah.
along with your job,
Yeah.
but 1-2 customers is too risky to start a business.
Yeah.
Right? Because one customer leaves you, your 50% of your revenue is gone.
Yeah.
So, and he has too much leverage to hold on you. He can pay you anytime he wants. He can negotiate the prices the way he wants. The moment he knows you are now no more in job, probably your life is dependent on the money he's going to give you. Obviously, that's going to give him too much leverage to probably control things or negotiate in the way he wants. So 1-2 customers is too risky. Probably try to have a pipeline. So how do you have a pipeline of customers? I think that starts with really understanding the unmet needs of your customers. I mean, thanks to your
Yeah.
job profile, you mentioned sales.
Yeah.
You have met so many number of customers over your period of your career, right? So you heard to every single rant they did. So you have a very clear idea which exact problem in the industry is not solved for. So you start there. You tell, this is what I'm going to solve. And probably if it's a separate product line, it can add to the overall, pipeline or business. So once you know this customer segment, this product line is not being catered, you start from there. So you have a pipeline of customers, not just one customer. And that's how you evaluate an opportunity, not just based on, I know a person in, a business house, he'll give me business. Too risky to start for.
Wonderful. A couple of things that comes to my mind,
Yeah.
if I may add. When a diagnostic company employee turns to be a distributor is essentially an intermediary between a company or a
Principal, yeah.
manufacturer and the customer.
True.
The manufacturer could be an Indian company, large company, or an imported.
Correct.
So I think most people start by being an intermediary or a distributor of an Indian company. Now, given their experience, they may think that all these customers are close to me because I've been working with an earlier company. So that's the advantage they want to encash. So one thought that comes to my mind is start where you have been working in your territory. If you were working in, let's say, in Bangalore, start your business in Bangalore,
Exactly.
not in your hometown, let's say, which is in, let's say, Belgaum. Okay, so that you get an advantage. Second is, before you start a company, because customers are there, what's more difficult is getting the right kind of companies, distribution.
Correct.
Get some groundwork as regards which company distribution you can start, so that when you start, you are representing a set of good companies. The third option is you be clear whether you want to be a distributor or an importer yourself, creating a brand of your own for India. I mean, you may be an importer of a, say, a Korean company, or a Taiwanese company, or any other, or even a US company, to bring them into India. So most of the people may take the first route, that they would be comfortable with being a distributor of an Indian company. Some of them straight away get into being a importer and then look into a larger territory, not just a city or a state. So in whichever way, what you said is very important, that keeping one to two customer in mind. Don't start, because that's just a beginner's luck.
Yeah.
That may be very deceptive as well. And in all the probability, when the same customers who entertained you when you were representing a good company earlier may not entertain you today when you are on your own, when you go with a different visiting card. That's so another aspect is, most salespeople, they are very good in the selling side of the business.
Mhm.
But business is not just selling.
Exactly.
The cash flow and the finance and the stock keeping, and so that's where the learning curve gets started when they take the plunge.
True.
So these are 2-3 thoughts. And now let's talk about the capital that's required for a distribution business, and what kind of capital is needed, and also how much fund you should keep aside for your family when you start.
See, family side, personal side, low, easily understandable. I think you should have, basically one medical insurance sorted, one health insurance, sorry, one life insurance sorted, and 6 months of your emergency fund means your monthly expenses, how much is it for total family. At least for next 6 months, you should have it sorted as a liquid, investments. So these are the personal side. At least this should be there. Probably some other consistent cash flows if you have. Other than this, it's good, right? Means your cash flows are not only dependent on your business, but also there is something which rental incomes, your spouse income, and all of that adds to it. At the same time, when it comes to setting up the business, the investment cost,
Yeah.
I think first you should plan your setup cost. Setup itself is, a lot of entrepreneurs come to me and tell, Abhishek, I want to set up a company, private limited company. If the private limited company to set up and run and operate itself, generally cost about today 50,000 to a lakh rupees, right? And
Right.
they tell, Abhishek, is this much should I, put money before even I have my single rupee in revenue?
Yeah.
Like, of course, like there are regulations, there is a basic setup you have to do,
Yeah.
and people think this is too much, right? I would say an decent office setup to probably attract and retain talent. Today, attracting talent is crazy. One of the biggest problem any industry faces
Very
today
true, very true.
is getting right talent.
Very true.
So you should have a decent office to get good talent. Then there comes your working capital. So you have to at least plan. Distribution businesses suffer from very long working capital cycle,
Yes.
right? Be it inventory keeping or
Yeah.
be it your debtors paying you. I think you pretty much suffer a lot
Yeah.
there. So at least I would say 6 to 8 months of working capital should be solid. Your stock money, your debtors money should be kept,
Yeah.
right? And apart from which, and you primarily operate in a rental model, instrument rental model where you give instruments for free of cost, right? So
Yeah.
if you are going to invest, it's a pretty much a Gillette model,
Yeah.
the razor blade and the blade model. So when you do that, I think to place those instruments, if you are planning such, then that fund should be a separate fund. It should not be from that's not your working capital, that's your capex,
Yeah.
right? So you should plan your capex separately and
Yeah.
working capital separately.
Yeah.
So these are the few things you should consider before even
Yeah.
starting.
Yeah.
Yeah.
Again, here I have a couple of thoughts. One, I think somebody who wants to get into distribution business, after spending many years into sales and marketing another company in that sense, I think you should get hold of a mentor.
Mm-hmm.
Somebody who is a distributor
Mm-hmm.
themselves, because if you are reaching out to another company senior, he may not still understand what is the real nuances of distribution business.
Exactly.
Ideally, he should have a mentor who is a successful businessman, according to me. And you may find it within the city, or someone, if you are not comfortable, or if the other person is not comfortable because of the reasons, you can always find out outside of the city, somebody who was your senior who started distribution a few years back, because the kind of insights that they give you is very important.
Definitely.
Something comes to my mind. A few years back, one of my colleagues started a distribution business in Guwahati.
Okay.
Okay. Uh, I asked him, after about 3-4 years of his starting his business, I asked him, how is the business going and how are you getting customers and all. His answer was, Sangeeth, getting customers is not the difficulty for me. The question is not about whom to do business with. The question is about whom not to do business with.
Exactly. Not all opportunities are good.
Yeah, because the risky customers, non-paying customers, okay. So that comes with an experience that he got. And if someone new getting into a business has people like him to mentor, that would be great. Otherwise, what happens is, this gentleman who started his business newly, he would get into a desperate mode. He would get into his previous company salesperson mode and do some desperate selling at a very low margin to risky customers, blocking all his funds. So in the initial years, rather than the sales figures, I think the fundamentals of the company, especially the cash flow, has to be more focused.
Very true. I think it's a double-edged sword, and once a mentor told me the same. Abhishek, you're doing business. I mean, you're into a profession for last 5 years. Good, but always be mindful. One mistake could kill your last 5 years' effort.
True.
So I think in business you have to be always be mindful of not doing any mistake. That's why larger companies, if you see, they obsess over process perfection. Means even they take the bureaucracy. Means like smaller the company, lesser the bureaucracy. Means execution is fast.
Right.
Larger the company, generally the execution is slower. They accept it. They gulp it up primarily because any process error by probably to fasten the execution can cost them a lot than what bureaucracy causes them. So very important point you mentioned.
Yeah. So now let's come to, while forming a company, what are the various formats of business in terms of whether you need to start as a proprietary or partnership or private label? If you can touch upon those, and what is most suited for a distribution business, if you can.
See, I think these are called generally legal entities. The choice of the legal entity is what
Absolutely.
technically it's called. So you want to choose the legal entity which suits your primary purpose. It can change from person to person, and how probably they want to introduce capital into the business. The most easiest, quickest, cheapest way to start a business is starting a proprietorship, right? When you have an Indian distributor, your customers are pretty local, right? Not so complex, not corporate hospitals, pretty small clinics or laboratories, Then you're good with the proprietorship, where you start, you sell, you buy from the Indian buyer, you give it to them, and they pay you on time, and things go well.
True.
But when it's, let's say, you're import dependent, you're importing from a foreign player, they just, even before signing up the distribution agreement, they flood you with paper. They ask, what you can do, these are the liability classes. So when that kind of risk is involved, and probably, you're not doing alone, you're having a partner, right? Or people putting in money, let's say an investor, I'm putting money, you do the business. The most suited business would be a private limited. Means when you have a third party investor, who's non-business but was given you some money, right? And you have a client which is very paperwork driven, there's a lot of liabilities involved even for single mistake, then private limited, because it gives you something called as a limited liability. So the limited liability is basically, let's say some suit is filed on your company, and the suit is, say, a 10 crore suit, right? Something malfunction, I mean, it can go crazy, right? So whatever the company's asset size as on that date, let's say the company has asset of 5 crore, but let's say you personally over the years have built an assets worth of 50 crores. Now for the 10 crore lawsuit which is there on the company can pay just 5 crores and tell I am bankrupt,
True.
right? Where your personal finances will remain intact.
True.
It will not, I mean, the court cannot attach your personal finances when you know, there's some suit against your company. Both are two legal entities under the eyes of law.
Yeah.
It's a different person, you are a different person.
True.
So that's why people go for private limited companies. But the downside being it's pretty costly to set up, costly to maintain. I mean, there's a lot of compliance involved in running a company. At the same time, this for a company, right? There's also another model called as an LLP, right? Similarly, you do business with an Indian company. You have a very small setup. It's you, your brother doing a business, right?
So LLP is limited liability
partnership. Yeah. So small setup. You or your family doing business together. Your son doing business.
Or two
together.
friends coming.
Two friends coming together. Yeah. No big contracts. Very. Then what you do is you can always form a LLP, right? It also gives you limited liability protection. But at the same time, it also offers you another flexibility where you can withdraw capital at your convenience. Whereas in a private limited company structure, withdrawing capital out of the business is not so easy. You can only declare as a dividend, or you should do a buyback, right? So all this procedural stuff is more. Whereas in a LLP model, it is pretty. You get the benefit of limited liability, but at the same time, you get flexibility towards taking your money out. Because when you and your brother are telling he wants some, he has a financial need, you cannot tell, like, wait till I declare dividend, then you take the money. You can't tell. It's family, right? So then this convenience becomes as a much important factor. So LLP is one such great model which offers you best of both. But again, the downside being there is no clear distinction between ownership and management like the company, right? Where company you can tell, let's say one person invests money and I do the business. You can tell you are the investor, I am the operator. I take this much, you take this much. There is a very clear framework by the Companies Act itself on how this should work. What are the rights of shareholders, the investor? What are the rights of the person who runs the company, right? So this is very clearly defined. Whereas when LLP, there is no such distinction. So
one cannot be a passive investor.
Exactly, or there is no clear framework on that.
Yeah.
You can still be, but there's no clear framework
still
by
a
the law.
partner.
Exactly, you are still a partner even if you just put the money, right? So this becomes complicated since there is no legal framework. Yeah.
So making it a little bit simpler for someone who is, because I'm looking at someone who is just about starting in our part 1 of the discussion,
Yes.
So the options are, if you are alone starting a new business, easiest to set up is a proprietary firm. All that you need is a GST.
Yeah.
And since diagnostic comes under drugs, you need a drug license.
Yes.
And
Udyam registration.
Udyam is again a voluntary, but it's highly recommended.
Recommended, yeah. It
Highly
gives a lot of
recommended,
benefits.
Yeah, with a lot of benefits. We'll talk about that as well.
Yeah.
And then shop and establishment, the license, the basic,
municipal
all these,
licenses.
the very basic licenses you can start with a full-fledged diagnostic business. But as he said, the liability is on you personally as a proprietary organization, compared to the other higher formats of organization or other higher legal entities.
Yeah.
The second option is two people coming together. Traditionally, it has been a basic partnership form. Again, with unlimited liability, which means if there is a liability onto the firm, all partners, or as per the agreement, all partners are equally, or based on the agreement, they are
allowed to share the liability.
Yeah, so liability is shared. In simple terms, if there's a 10 crore liability on you, after taking the money out of your business, if still the liability is pending, let's say 3 crores is all that your business had to in the form of asset, that's taken, 7 crores, they can take your house.
Exactly.
As simple as that. Your other assets, house, gold, whatever.
Yeah.
So that's how it's called unlimited liability. So as to protect the businessman who is taking all these risks, the new formats of limited liability partnership has come, where your liability is limited to the amount of investment that you are doing into the organization.
Yes, you're right.
Similarly, a private limited, the word limited itself means my liability is limited. So in a private limited organization, your liability is limited to the shares that you hold in that sense. Okay, making it very simple, or the unpaid share capital. I'm not getting into that.
Yeah.
Okay, so now the question is, which one? Let's say someone started with a proprietary firm, or the years they want to scale it up.
Okay.
Can a proprietary firm be converted into a LLP, if let's say there is one more partner joining, or into a private limited company?
Okay. Yeah, very much. I mean, pretty flexible. See, proprietorship is, I told you, right, the most simplest. Primarily because there is no regulations surrounding a proprietorship concern.
Yeah.
No specific regulations, right? So only tax regulations come into picture. But when you want to convert, you come under specific regulation. If it's a partnership, it's Partnerships Act 1932. If it's LLP, LLP Act. If it's company, then Companies Act, right? So everything has a legal regulation telling how it should be formed, how it should be maintained, everything comprehensively. So now you want to convert a proprietorship, there is no such conversion option because there's no legal regulation on it.
So you have
to fresh.
Yeah.
You go and form a fresh entity under partnership or LLP or company. Then what you do, you transfer all your assets as probably there's one option under law called slum sale. So you can do a slum sale of all your assets or all your everything at book value to the entity or new entity you're forming. So the benefit is in doing a slum sale, no GST on this transfer. You can do a GST free transfer, and then there is no income tax because you're going to do a WDV, means book value of this. So no tax effect. You just do a plain vanilla transfer and pay no tax to government. Means it's allowed under the law, right? So you do a slum sale and you're sorted. You want to convert into from proprietorship to a LLP or a company. Now coming to a partnership. Let's say you are already a partnership and you want to convert into a company. Now Companies Act provides a legal framework on how to do this conversion. This specific framework on this. You have to do the compliance is bit a lot, right? So primarily companies do this to maintain their vintage, right? Vintage, your name, your licenses. See, I mean, under law, moment you do a conversion, it is assumed by the government that all licenses of the older entity is now moved to the newer entity. All the assets is assumed, is deemed to be, legally we call it deemed. So deemed to be have been moved to the newer entity. So Companies Act offers such regulation for partnership and LLP conversion. So now we are a partnership firm or an LLP, you are allowed to convert into a private limited without, there's a legal framework on it, and you can, again, it's your choice. It's bit of a pain because it requires you to, publish in 2 different newspapers that you are converting. All your creditors as on their date, means your lenders, people who have given money, be it stock, I've sold you, I'm a vendor, right? Or I'm a bank, I have given you, loan. You have to get NOC from everyone. Everyone should give a no objection for your conversion. And then you take up everything, go submit to the ROC, tell, I've complied with everything. Then ROC checks. Everything is in order. Means you have published a newspaper and you have to leave it for 21 days. Means 21 days anyone can come and object for it. I don't want this guy to convert into a private limited. So you cross all this, then ROC approves your application. This is the process. It's a bit painful. So your choice, you can do it. Or again, you are allowed to form a fresh entity, do a slum sale from partnership or LLP to keep things simple. Right. Yeah.
So my understanding from what you said is every business entity has or format has its own advantages and certain disadvantages as well. And therefore, which format to start with? One could take the help of a tax consultant or a chartered accountant. Based on each specific situation, they would support or they would advise you properly. So that's, I think, one of the first steps. I think.
You should have a solid CA from the beginning.
Okay. Another issue is most entrepreneurs, especially the new generation startups, they find it very difficult in terms of managing their funds for the business as well as families. Your family has some wealth, managing between business fund as well as family wealth. That's a bit of a ambiguity area that if you can talk about a little bit about
pretty large area, right? Probably I can give you a few things, you should be mindful of. First, I think you have to segregate both.
Right.
That's where you start from. So business funds are separate, and your personal funds are separate. I think that's where a lot of people, even today, I see people doing mistakes. Means they use their business CC account to purchase car.
Very true.
Very common also, right? So they purchase car using their CC account. So it's so you have to clearly separate, and they justify that the car is being now used for business, right? So it doesn't hold good really. So
But that offers some tax benefit. No?
obviously, but see, like car is a personal asset, and though you can justify it telling that it's used for business, buying it with CC account, cash credit, which is primarily given for your stock and debtors, means CC is for your working capital, right?
True, true.
Means it should be rotated.
Yeah, true.
You cannot buy a capex.
Yeah.
So even business wise, finance wise, it's wrong, and buying it for personal purpose is even more wrong, right? So you can probably take a car loan, a vehicle loan to buy it, right? So that also again and you can buy it in the company's name, or if you're a proprietor, it still offers benefits. So yeah, something like that. So yeah, segregate your finances first. Number one, have two different bank accounts. I think if someone is starting,
Very true.
have a current account, have a savings account.
Very true. Yeah.
And from then onwards, what you do is you maintain your business fund separately with proper accounts and everything.
Yeah.
And for your personal requirement, you just take a salary, unlike any employee, right? Being an owner of a business is also an employment, right? Maybe you're the first employee of the business, so you take a salary every month.
Yeah.
Based on, again, this taking salary again is a very tricky area. Primarily, why? Because these we are used to, when you're working as a salesperson, you're used to big salaries,
Big
right?
salary, yeah.
Obviously, after 20 years of experience,
Yeah,
you would
you
be
have
drawing a
good salary,
huge
yeah,
salary,
yeah,
right?
yeah.
So now when you start a business, it will feel painful to again go and draw a smaller salary.
Yeah, very true.
Right? So what people do, people try to take, and you also, it's not about them, they have a lot of commitments as well, your EMIs, SIPs,
Yeah.
everything, rental cost and all of that. But again, it's very important that you draw money from your business which will not affect your overall working capital cycle.
Very important.
Very important, right? So assume business like this. It's probably an oversimplified version, but that puts the context into everyone's mind. Business is function of three factors. Any business, distribution business, manufacturing, everything, just three factors. How much capital you have put,
Right.
how many times in a year you are able to rotate the capital,
Mhm.
number of rotations in a year. Means every time what happens, you purchase goods from someone,
Yeah.
you keep it as stock,
Yeah.
you sell goods to the customer, you convert it to debtors, again the debtors converts into money. This is called cash conversion cycle. This is one cycle, right? If you're able to do this 5 times in a year,
Yeah.
you put 1 crore,
Yeah.
you would have made 5 crores in revenue.
Yeah.
If you do it 2 times in a year, you would have made it 2 crores in revenue.
Yeah.
Then how it works? So this is two factors. So one, how much capital you put, how many rotations you make.
Yeah.
The third one is
So
how
revenue
much.
by capitalize the cash cycle.
No,
Is
no,
that
it's
a
not.
very simplified?
No. That's oversimplification. Again, there are a lot of complexities to it when you do it in real business. But as of
Yeah.
a very broader perspective, you can
Yeah.
take it. Now, don't go much deep into it.
Fair
It
enough.
might become more confusing
Yeah.
as I add more layers.
Yeah.
Right. So two factors. Now, third one comes the gross margin you make in every cycle,
Sure.
or you can, to put it again very oversimplified, the value addition you make in every cycle.
Mm.
So you buy it for 100 rupees,
Yeah.
customer you sell it for 20 rupees,
Yeah.
right? So you make a value addition of 20 rupees every cycle.
So 120 rupees is the selling price.
Selling
Yeah.
price. So you make a 20 rupees value addition every cycle. Means your 1 crore capital
Yeah.
converts into a 1 crore 20 lakhs capital
Yeah.
for every cycle.
Yeah.
So you do it 5 times
Yeah.
in a year,
Yeah.
you would end up in a turnover of 6 crores.
Yeah.
And your gross margin would be
Yeah. Once year.
20 lakhs into 5. Again, all your other expenses,
Yeah.
then a net margin. This is a very oversimplified view on your
Yeah.
P&L. Any business
Yeah.
works like this, right? So now, if you take this, how much should you draw now?
Yeah.
Right? You have to have a very clear understanding on two things.
Yeah.
One, your overall working capital cycle.
Yeah.
How long does it take?
Yeah.
Let's say assume for most distribution businesses, the cycle is anywhere between 4 months to 6 months.
Mm.
Maybe you can, industry veteran, you can correct me if I'm wrong, but
Yeah.
in my clients it's 4 months to 6 months cycle, right?
Yeah.
So now this is a typical cycle, or 3 months to 6 months, right?
Yeah, I would say 3 months.
3 months.
Given
Yeah.
that most companies give a 30 days credit, so your stock is kept in your godown for about 30 to 60 days, between 30 to 60
No, not
days.
just that. You have to add your debtors also, right?
Correct, correct.
Yeah.
Then
so
the debtors is about 3 months. So 3 plus 1, about 4 months.
4 months, yeah, 4 to 6
Yeah,
months.
yeah,
Again,
yeah.
if you're a good customer, 4 months.
Yeah, yeah.
Bad customer, 6 months. So
Agree.
depends, right? So 4 to 6 months. So now your one rotation takes 4 to 6 months, right? So 1 crore you have done one rotation in 6 months.
6 months,
right?
yeah,
You have
only two
end up
rotations.
20 lakhs. Right, so 20 lakhs is your total revenue for the period,
Yeah.
or realized cash revenue for the period.
Yeah.
Now what you can do, this 20 lakhs you can divide 6 months.
Yes.
So that if you divide 20 lakhs by 6 months,
Yeah.
that is your
About-
total
yeah.
monthly cost.
Yeah.
I mean, a monthly
Yeah.
cost you can afford,
Yeah.
really, right? Should come about
3.33 roughly.
3.33 lakhs. Let's say you have a rental cost, your salary cost,
Yeah.
all of it is 2 lakhs.
Yeah.
Then you're okay to take probably 50,000 to
True.
1 lakh.
Yeah.
Still you'll have 25,000 in business as profit.
Yeah.
Right, so this is how you plan your salary. And if you do this, means ideally what you're doing, you're just trying to split your cash profits between your working capital cycle number of months, and you take the portion of your cash profit as a salary.
Yeah.
So that's how
Very
you
true.
see it.
Very true.
Yeah. And if you do this, I think you'll be okay,
Yeah.
doing well.
So, practically in the initial years,
Mhm.
you're feeding your baby, the
Correct.
business.
Correct.
You're putting a lot of money, or good enough chunk of your money,
Correct.
and then time and everything.
Correct.
And this is where you are always short of a working capital as well as cash flow.
Correct.
Probably this is a time when you will not be left with anything to take home
Obviously.
yourselves.
Obviously.
So when is there any kind of a benchmark when someone can start taking salary or money onto themselves?
Obviously, like this, I told you the framework. So the framework, 6 months, you rotate. 20 lakhs is your, see, if you are rotating only 1 crore, 6 months is 20 lakhs. If you don't have any money more than 20 lakhs in 6 months period, then you can't take salary. So until you make more than 20 lakhs in 6 months, and your monthly costs are met through this gross margins you make, then you're allowed to take whatever excess you're generating. Because see, if you don't take salary, what happens every month, right? Every month what happens, this, again going probably one step down, might become a bit complicated, but hope it's just, audience follow me. So like 20 lakhs you make in 6 month cycle, right? So now every 6 month cycle, you put this 20 lakhs, if you don't take much money, you keep it lean, you put 20 lakh into your capital,
Yeah.
back into business.
Yeah.
So your capital is now expanding from
Yeah.
1 crore to 1 crore 20 lakhs
Yeah.
every cycle,
True.
right? So by the end of 1 year,
Yeah.
if you have not taken much of money and you're able to do, let's say, 3 to 4 cycles,
Yeah.
then you would have put another 80 lakhs into your capital.
True.
Or probably, let's say you've taken 20 lakhs, you would have put in again 60 lakhs into it. So 1 crore capital becomes 1.6 crore. So this is why in early years, not taking much of money helps you, because
Sure.
it adds to your size of capital.
Yeah.
And if you're able to manage more rotations in a year, again, managing your working capital really well is a must in your business line of business. So if you manage it really well, you are able to do one more rotations more than your competitor, then you become a great business.
So this actually brings back to your answer for the first question. Actually,
Mhm.
you need to have enough cushion,
Exactly.
and things settled. Certain things, critical things, settled back home.
Exactly.
When you start this, because this is a cycle which could take 6 months or even up to 6 years. You never know. When is that time when you can comfortably draw salaries,
Yeah.
at least to the previous period when you were working in a company. So, and then that also takes us to the next point of financial discipline.
Mhm.
So, what are some of those important thumb rules that a distributor should follow so as to ensure financial discipline in his business?
See, I told you, right? Working capital management is your business course skill set. If you take next to sales, probably first skill set you need to do your line of business is sales. The second most important would be working capital management or finance, right? So becomes a crucial aspect of your business itself. First thing I would say is know your numbers really, really well.
Hmm.
Every single number, right? how do you do this practically? You set up a good, first it all starts with having a good accountant in place, right? Because if capturing of data is not done properly, then you'll not be going to see anything in your reports. So first capture should happen at the time of transaction itself. So that is my rule in my office. Whenever a transaction happens, the capturing of the transaction should immediately happen. It cannot go beyond 1 day TAT, right? Same day, right? So that is the must. Let's say you want to approve a payment, I ask my accountant to bring the invoice along with the entry in tally. Voucher, it's called a voucher. So the accountant should present me both invoice and voucher. Only then I approve the payment, right? Probably I'll see PO, I'll see whether the goods are delivered, all of this, and then I approve the payment, right? So this capture should be at the time of transaction itself. So more and more you emphasize it, your accountant starts becoming take it very seriously, and you take it lightly, your accountant also takes it lightly, right? So naturally it happens. Second is, once data capture is proper, then you set up a proper MIS system, which is called a management information system, where you see crucial numbers to your business on a, I'd say, month-on-month basis. Good enough. And not too late, probably 15 days from the end of the month, if you're able to see, you are one of the good businesses, right? Means your month closes on 30th, on 15th or 16th, if you're able to see your last month's numbers, you are a good business. So once you see your numbers, you will be able to course correct. How much sales have I done? How much profits have I made? What are my debtors as on date? What are my creditors as on date? How much stock do we have? What are the line item wise stock? Which item is less, which item is more. You can plan all of this better. And so one, capturing; two, having an MIS; and three, since I told you working capital is the most important aspect, having a very, very good control. I would say not even a month. These two items you have to do it on a weekly basis. Every businessman reviewing your stock, probably how much stock you have, probably physically inspecting it, and probably having as many classifications, since I think you have expiry dates and all of it.
Very good.
What is near expiry stock? What is very good idea of all of this. Second, your collection cycle. Which customer has not paid for how long? On a weekly basis, businessmen should know, so that you can take appropriate actions. Probably having a system, again we'll come to other aspects. So having a good system in place to probably collect or control the supply to a particular customer if there is a long outstanding, should be in place, right? So if you do at least these four aspects properly to begin with, this can, and probably last one I would definitely add is a cash budget. So have a very good budgeting system, month on month. So I told you on 15th you see your last month P&L, right? At the same time, on the 1st of every month, try to project, or probably on the 30th of every month, you try to project the next month cash flow. Which customer is likely to pay me next month? Which orders or vendors I should pay next month? So based on my collection, I plan my payments. If you feel collections won't be that much to meet all the vendor payments, then call the vendor, talk to him, can I get one more month? Something like that, right? You can, or can I make 25% or 50% next month? Talk to two vendors so that both of them are so something like this, a budgeting mechanism where you see, if you tell me, let's say I'm your vendor, you call me 1 month ahead and tell me, Abhishek, sorry, I cannot, I know your bill is due next month, but I cannot make you payment next month, but I'll make 50%. Please give me another 1 month to make the next 50. I'll be really happy, right? I love clients who talk to me like this. I tell pleasure, please take 1 more month, because I understand I am in business, you are in business. That's how we both grow together. So that's totally fine. So this kind of budgeting system and using the budget to plan your cash flows would be really, really helpful. Yeah.
Wonderful. Putting together what you said, I think the first is have a good software.
Yeah, capturing data. Yeah.
Billing software.
Yeah.
and
Content, yeah.
You said MIS, so I'm
Yeah.
putting it oversimplified here.
Yeah.
Because if you're starting, I'm visualizing somebody who is starting in the first 1 year of operations, where
Understood.
he may not have too many resources,
Yes.
whereas he can, with one accountant also, start something like a Zoho or a Vyapar software, which gives you, which not only helps you to do the billing, but also gives you the current outstanding, your stock value. So, therefore, it comes to the second point that you said, a weekly review of what's your current outstanding. And out of the total outstanding, which are those outstanding above 60 days, 90 days, like that, categorizing those outstanding as old outstanding and focus on collecting those old outstanding and review whether that customer is a good customer for you. If someone is not paying you despite your repeat follow-ups for about 200 days, better not approach that customer, forego that business. So therefore, it's a business reality that most customers pay in about 100 days, but that you cannot avoid in the diagnostic business as of today. But somebody who is above 120 days is a red mark for you. I mean, you should slowly cut down your dependence on such customers. Therefore, this weekly review of your outstanding is very critical. Second is the stock. When you are a distributor of certain companies, those companies have certain targets. So month end, those people will come and force you to accept more material, resulting in material getting piled up in your warehouse, and some of them getting expired. So there is a lot of wastage. There is a lot of product that is there, and you have to pay them on time. That's where the money get blocked up between your stock, which is 4x your monthly sale, which is not needed. So typically a stock should be not more than 2x the monthly sale. And if most companies are supplying you material within 3 days or 4 days, consider it to be a 45 days stock. Definitely not beyond that, because it's blocking your money. Second is, so if you are able to take care of your stocks, which is roughly about 50% of your total capital, and the roughly 50% or maybe more in terms of your market outstanding. If you are having a DSO, the daily sales outstanding, DSO is a terminology which most companies use, is if it's less than 100 days, then you have the margins that you are earning. And if your margins are decent, about 15% plus, I think you have a viable business. Any of these three pillars, your margin, your outstanding above 100 days, average outstanding above 100 days, margin less than 15%, or a stock which is more than 2-3 months, somewhere you will get blocked.
Yeah.
So this is one thing, and therefore say no to dumping companies.
Exactly.
Okay, companies who wants to dump you. Okay, another thing is that come what may, pay your suppliers on time.
Yeah, very important.
That's one way you can create the credibility in the mind of a company. If you are a pain point for your company, then they would not associate with you, just like you wouldn't want to associate with a customer who doesn't pay you on time.
Right, yeah.
So create that credibility again and again. Another thing is, distribution business is highly variable cost oriented. For example, every delivery is to be made by the distributor, so there's a cost of delivery. So the business grows, the cost of delivery grows. I mean, you may have economies of scale, but it keeps growing.
Yeah.
So that's where you shouldn't do random delivery costs. You should plan your delivery routes in such a way that the cost of delivery is less. So the variable cost, if you keep it at a very low compared to the revenue, I mean, all these things ensures a viable distribution business for a long term.
Yeah, true.
So, right. So that again, so these we spoke about a healthy business. What could be the red flags in a business?
And as you mentioned, like if your DSO is growing, right, or your outstandings are every month you're reviewing and it keeps growing along with the sales, right? I mean, ideally, if sales keeps growing, obviously the DSO will grow to an extent, but you have to check the percentage growth in both. Probably that can indicate the larger red flag when you're constantly monitoring it. Second red flag would be you missing out on your statutory payments. I see a lot of companies doing this. They take the GST money, use it for, like, when I sell some product, I know I'm collecting additional 5% or additional 18% to pay GST to government, right? But what I do in my working capital pressure, I take that money and use for purchasing, paying my employees and all of it. And moment I do that, it puts
It's like you are taking your baby's baby food and eating. You're not giving to the baby. You are taking that money of your company, which is, and if you're using it for personal use, especially the GST,
Yeah.
it's like snatching the baby food from your baby.
It becomes extremely difficult for the entrepreneur. This is a vicious cycle. I'll tell you. I've seen number of clients. Once they start doing this, they'll be in a vicious cycle of this. They'll try to come out again. This gets accumulated over a period of time. There is interest around, I think, 18%. You'll have to pay additional interest for every delay
Plus
you
penalties.
make, plus late fee,
Late pay, yeah.
plus the officer has discretion to levy a penalty, right? So it can, just like that, without even you realizing, can become twofold, threefold, whatever you'll have to pay. And people just what they do immediately, I've seen this in real life as well multiple times, just close the business, try to take new GST and start a new business, but it doesn't work anymore. GST officers have become really smart. The systems, the process systems they have has become really, really smart. Now they don't give you new GST. Even if you change the constitution, apply, let's say I was a proprietor, I did this, now I'm forming a partnership, LLP, they see every single partner director has any GST discrepancy, only then they approve the application. So they are also becoming putting a lot of mechanisms into picture. So this will not work anymore. So this discipline should be there. You get GST money, keep it separately. You get ESIPF from detect ESIPF from your employees, keep it separately. It's not it's money you'll have to deposit to government, right? So this is something, statutory payments is a clear you moment you meet a person who tells I have not paid GST for 3 months, his financial discipline is really, really poor, right? So the biggest red flag. Then probably having very so this is one common red flag I've seen multiple. Your accountant keeps changing often. It's a common red flag, because see, your systems and the owner's culture is the organization culture, right? So moment if I don't take my accounting seriously and operate accordingly, my accountant's life is going to become miserable. And being a proprietorship concern, it is really, really difficult. Why? Because proprietor will do one transaction is one of his card, other transaction will be in his credit card, right? So it gets scattered, and the accountant will feel overwhelming to collect all this information, and he'll be a single source of information, right? And he will not be very comfortable telling what all expense I did to the accountant. It's a very common problem I see many a times, and accounting becomes messy, poor, and because of which again filing gets delayed, right? If I ask accountant, he'll be like, sir has not sent me statements yet. Alright, it's 20th, you have to file GST. Sir, statements have not been received. Very simple logistical reason why again financial discipline red flag and all of this. Third one, I would say biggest red flag I see among people is using their CC, cash credit, which they got from banks, in their vision will. Using it for personal, using it for other than business, right? Giving loan to Sangeeth. If Sangeeth is a very good friend of mine, I'll take bank's money, give loan to you. This is all happens, and it's terrible. Like, see, this has a cascading effect.
Very true.
So you do this, again you become short on cash, your working capital becomes tight. Now you keep on the other side, you keep expanding the business. You like, customers are good, let me increase my sales. At the same time, you're not managing your working capital well, so you again borrow more. Again you grow, again you borrow more. So before you realize, within 3 to 5 years, you would have accumulated so much of liabilities, and your business margin. So what happens? People become, I've seen in real life, people become desperate as you have too much commitments, too much EMIs to meet, too much interest obligations to meet. You will be like, any sales is good sales, because at least I'm making 5%.
Yeah, very true.
So they reduce their margin from 20 to 18 to 15 to 10 to 5.
Yeah.
So now your margins are thin,
Yes.
your working capital is bloated,
Yes.
you have so much of obligations, a disaster. A disaster which can happen to any businessman.
Yeah.
So if your margins are thin, you should be working capital, you should be comfortable, or don't do the business. See, moment of working, owner tells me, Abhishek, I have a margin of sub 10%, and I have a CC facility in bank, and I want more CC. I know for a fact this person is going to be in trouble very soon.
Yeah.
This is a deadly combination in any business: lower margins and higher working capital requirement.
Yeah.
So, biggest red flags you can see.
You know, taking money out of your business, especially diagnostic industry, to a great extent, not totally, to a great extent, is also having certain seasonal ups
Seasonality,
and
yeah.
downs. You know, especially the fever season, which is now
Rainy
starting.
and,
Rainy and post rain, you have all these fever season and all. So that's when the laboratories has a lot of patients. When the labs do double the business than off season, or maybe 3 times, they order more. So the distributors get a lot of business, and that's when the labs have a lot of money coming in, because lab essentially, is not a credit business between a lab and the patient generally.
Yeah.
Corporate business,
It's cash business. Yeah.
so the labs also pay on time. The distributors are happy. Suddenly, after December, or November, the market goes back, healthy season, winter season.
Okay.
The labs do not have money, but they have already taken a lot of stock, hoping that there will be extended period of season. Labs are saddled with lot of stock, but they don't have money now to pay to the distributors. So distributors, 6 months, they were getting a lot of money on time. Suddenly that flow slows down. Looking at the money that comes, most of these single distributors, smaller distributors, they take a lot of commitment onto them. Buying a house, buying a land, doing this, doing that. They take a lot of money out of this. Then they don't plan for the next 6 months of lean season. That's where this, you need to have that planning and a greater understanding of, okay, November onwards is going to be my business from, let's say, 50 lakhs a month, or once year to month is going to be 50, 60 lakhs a month. Therefore, it's going to come down. Therefore, I need to prepare. I don't take all my thinking that I got a lot of profit during this season. I mean, don't take everything out of it. So that's an individual. Each distributor has to plan his finances very carefully. So, coming back to the new business, what's this rule called a rule of 1,000 days?
See, interesting rule. Any businessman, I think it originated from a certain community of people. It is said to be like, they tell it in a very local slang, where 1,000 days you will have to be in a business to really get the hang of it, right? In a very colloquial way, that's how it is told. But practically how it works, you have gone through multiple cycles of your working capital.
Right.
In 3 years. So you start with the lean capital, at least you would have gone through 5 to 6 cycles in 3 years. Your capital cycle would have stabilized. You would have added, I told you, right, the 20% of every rotation you make. That would have, provided you didn't take much money out, you operated lean, you would have started putting that back into your business, and your business, naturally the capital in the business would have increased, provided you didn't take much money out, right? So this now will give you, after 3 years, now you have a comfort to even have a larger working capital cycle, or can do a capex, take some money out comfortably and do some capex in the business to grow. So this 1,000 days is basically that. Probably you stabilizing your early customers, you acquiring new customers, you learning, you told, right, have a mentor. Probably in 3 years now, you yourself, after multiple this practical realities you got from the market, you will now learn who is good customer, who is bad customer. 3 to 4 years in business, you realize, right, okay, this guy is talking too much, probably he's not a good payer, like something like, or you have friends in your industry, or made good number of friends in your industry, that they'll tell, hey, this guy don't go, he's not a. So this is what 3 years are generally for. In financially, it is like multiple working capital cycle. Every cycle is going to give you some kind of insight if you're serious on the business, monitoring your numbers and all of that. So you would have at least gone through like 3 into 3, 9 to 10 cycles, if you're doing just 3 cycles in a year, right? So that is would have given a lot of insight, and your early team would have got settled, again, to take one role. You have to interview at least, today hiring is pretty tough. So you have to at least interview like 10-15 people minimum, hire one good person, right? So this 15 people would have seen multiple times. Now you know what exact type of employee suits your culture, right? So not just knowledge fit, you also should have culture fit. So, and in 3 years your employees would clearly know this is what our boss expects, this is what our boss operates. So all this stabilization generally takes about 1,000 days. So without, however, whatever struggles you undergo in business or whatever wins you do in business, you have to be there in business, survive these 3 years, and then plan to thrive. So that is the rule of 1,000 days.
Very good. In fact, in a way,
Mhm.
if you survive, because you said survive, if you
Yeah.
survive that 3 years,
Yeah,
the probability of your business sustaining and growing is higher.
much higher. Yeah.
Because most businesses, the destiny of a business is decided in that 3 years, whether that
Probably,
business
yeah.
will survive or not.
True.
Uh, there are cases where some people have seen their biodata when I was working. It says that in within 2 years I had my own business.
Okay.
And then I closed down and I came back to industry, as an employee. So we get curious, we ask them what kind of business it was, why was it closed down. They have a lot of reasons. I started and then COVID hit and
Closed.
this and that and all. Okay. But the fact that most people who starts a business, closes down and then comes back to industry, that closure happens within the 3 years.
3 years.
They did not survive that 3 years.
Yeah.
Okay, so 3 years is a time when you give everything to your newborn baby actually.
Exactly. One addition to this,
Yeah.
see, it is also probably two reasons can be. He's not prepared well
One-
for these 3 years,
Yes, very good.
right? So when you plan your capital, when you plan your financial stability, as I mentioned earlier, you have to at least plan for next 3 years.
Yeah.
3 years, I have rental cash flows coming. Even if my business don't go well, my rent will keep my family, healthy. So that, and or they have a poor mental grit. So that also, like, see, business is one day is a really tough day. One day is a good day. One day is an extremely nice day. Morning itself, I feel really proud about myself, when someone. So that's how business is. Like one day I feel really shitty about myself, why am I even doing this? So it's like a lot of, cycles happening.
Ups
But
and downs,
yeah, but at the same time, you just come to office every day, meet people every day, get their work done every day, so that or probably sell. I commit to something, do it every day. That I keep on showing up. The 3 years after which starts paying me back.
Or the third reason could be he has seen a lot of motivational videos.
Exactly.
And thought that business is
Quite,
all about minting money. So then later he realizes it's not that easy. If someone who is in the distributor community would like to reach out to you to take your advices, are you available?
Definitely. I'll be most glad to help out. See, I would prefer if they, like, email would be the most better, because I'm really poor on
Okay.
replying on WhatsApp or calls. But yeah, if I'm happy to provide my number as well, they can reach out to me. So first priority is mail,
Yeah.
second would be my WhatsApp, and third would be call. Yeah.
So when this video goes into the YouTube channel of MedDevice, as well as MedDevice has an app. Along with the video in the description box, we'll put your email and
Please.
WhatsApp number so that
Sure.
interested people can reach out to you. Well, that takes us to the end of the part 1 of our discussion. And in the part 2, we will discuss more about the nuances of an established business, their scalability, their valuation, and succession planning of an established business.
Definitely.
So thank you, viewers, for being with us so long. It's been a pretty long conversation, but I'm sure it's worth it. And what you thought about this whole conversation? What are your comments, opinions, thoughts? Please put it in the comment box in the YouTube as well as in the app of MedDevice. Signing off for now. Bye bye.